Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the boards of Abu Dhabi's real estate giants Aldar Properties and Suru Real Estate have agreed to recommend a potential merger to shareholders, subject to a number of conditions, and to be renamed Aldar Suru Properties. According to a statement posted on the ADX website, the meeting was held on Sunday in Abu Dhabi, and the deal will create a real estate company with more than 47 billion dirhams worth of combined total assets and a combined market capitalisation of approximately 10.9 billion dirhams, based on the latest share prices. It added that the combined business will also offer significant benefits to all stakeholders, as well as a more diversified and balanced asset portfolio, better access to capital markets, and synergies of up to 110 million dirhams per year by 2015. The UAE's real estate market outlook for 2013 looks positive, off the back of an increase in economic activity from countries such as China, South Korea, as well as sub-Saharan Africa and Australia. That's according to the annual Jones Lang LaSalle report. Conducted for the 6th consecutive year, the findings of the 2013 Top Trends for UAE Real Estate study revealed the 7 key trends forecasted for the year today. The CEO of the global advisory firm, Alan Robertson, stated that buyers and tenants will have a greater choice in some sectors as supply levels remain significant. Also listed as a key trend, there will be more awareness of the importance of both the operational and financial aspects of property management. With a return of confidence, Robertson warns, however, that investors should not get carried away with investments.
Well, we'll see restrictions both on the developer side and on the purchaser side. On the developer side, a lot of the banks are still overexposed to real estate, so they are not going to lend very adventurously for new speculative property projects. So that will be a natural constraint on the rate of new development that we will see in the marketplace. On the buy side, the UAE Central Bank have announced their proposals to cap the loan-to-value mortgages that can be granted by banks, and that will dampen the demand side, certainly for residential property. It will make life more difficult for individual purchasers, but overall it will be quite a good dampening effect on the marketplace and prevent price inflation returning.
Jones Lang LaSalle industry professionals also revealed that with geopolitical challenges in the Middle Eastern region, such as Syria and Iran, this has both a negative and positive impact on the UAE. Fortunately, the Emirates is considered to be a safe haven for investors, with improved prices and rental performances.
Aside from the residential market, which has appealed to buyers from all over the world, if you look at the institutional market and the commercial property market, most investor interest has been from within the region, particularly from other GCC countries. We don't think Western institutional investors are going to return to the market, but this year we do anticipate seeing more interest from the East and from the South, from Asia, from China, Singapore, South Korea, possibly also from Australia. We see increasing investment interest in the real estate markets from institutional investors from these marketplaces.
And looking to other business news, the US dollar made some significant gains in trading last week as the risk of sentiment dominated the final few days of trading. The Japanese yen posted its 4th consecutive week lower against the US dollar, during which the USD JPY gained more than 500 points. With the Bank of Japan set to announce further monetary policy tomorrow, we asked Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, what to expect in the week ahead.
Attention this week will focus to the Bank of Japan's interest rate decision, which is expected to come out on Tuesday. Now, obviously, since we've seen the new PM, Shinzo Abe, come into power, he's continuously been a very, very big hawk of the Bank of Japan's policies, and he's actually forced them to kickstart additional easing policies in a bid to weaken the yen and to kickstart a recovery and defeat deflation in Japan. So tomorrow's decision will probably see the Bank of Japan announce that they will increase their asset purchases by a further $111 billion US. This should continuously have a weakening impact on the Japanese yen. We're expecting the USD Japanese yen pair to probably test 91 levels this week. If we move across to Europe, it's going to be a big week for the UK economy. We do have some employment figures coming out. The overall unemployment rate is expected to remain unchanged at 7.8%, but unemployment claims are expected to increase, which should show a soft patch in the UK data from last month. Also expected out of the UK is the Bank of England meeting minutes. No surprises are expected from there. The voting patterns are expected to remain at 8-1 in favor of holding the rates at 0.5% from the Bank of England. Also coming out from the UK at the end of the week will be the GDP reading figures. Overall, we're expected to see a slight contraction in the quarter-over-quarter in the last quarter of 2012. So this should overall see the year-on-year GDP for the UK economy at 0.3%, while the quarter-on-quarter is expected at minus 0.1%. Over across into the Eurozone, a couple of key figures we'll be watching will be German PMI figures as well as the economic surveys for sentiment with regards to current sentiments. Those are expected to be slightly in line or higher than expected. But overall, we're not expecting to see anything too crazy for the euro. Trading should be range bound, and we're expecting the euro USD to trade between 132.50 and 134 in this week ahead.